Let's move on to today's market movers with easy to follow futures and options trades from CME Group.
Welcome to Market Movers. I'm Jim Urio, and we've had a wild week so far. We've had massive spikes in volatility, a 10-year yield that continues its steady and defiant march higher in spite of the stock market whipping around. We've seen hints of inflation. We saw it about a week and a half ago in the non-farm numbers. We saw it again in CPI. Today we're discussing gold and tens and stocks and how they're all digesting this new world of potentially higher rates. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Okay.
Happy Valentine's Day.
Thank you very much.
Good. Now we got that out of the way. Now back to the show.
Thank you. The market believes there's a chance that the Fed is a little bit behind the curve. Are they?
It depends how you look at it, because to me, it's, yes, in the interest rate hike cycle, yes, because there haven't been that many yet. But with regards to how they're talking about inflation coming on and keeping an eye on data and probably more hikes to come than they've seen in the past, that's not behind the curve in my opinion.
Now, we've wanted inflation for a long time. Why is it so unsettling when it comes?
Because the market's got it wrong, or investors or traders do, I think, to be completely honest with you, because you're right, especially early cycle inflation like we have now, this should be a welcome piece of news.
Before we get to gold real quick, does your gut say the stock market correction is over? Is there new lows to come?
My gut says a lot of things. Both, actually, which means first things first, though, is going to be new lows to come, I believe.
10-year yield, where's it go?
In the next 3 months, I would say it goes above 3.15%.
Okay, I think 3%. Now, before we dive into our trade discussions, we're going to be talking about gold. I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to either manage risk or create additional trade opportunities, not as recommendations or advice. Prices and movements will vary. When we priced it, the April gold contract was trading $13.55. Scott.
So you just asked me a good question about where I feel interest rates are going, and especially in the 10-year in the next 3 months, and I said 3.15. Which you probably think, oh my gosh, that's really high. Well, yeah, it is, because inflation is here. And I think the market, to your question earlier, which was very astute, is that, if I may say, is the Fed behind the curve, or are people expecting this big inflation rise coming? And I think that's really what's going on here. So looking at gold lately and how it's trading, that would signify that as well, I believe. So specifically, Jim, looking at the week 1 March gold GC, 1350, 1375 call spread. It's going to cost you about 9.3 ticks to put on. It's got an underlying, as you mentioned, 1355. It expires on March 2nd. The trade risk 930 to make potential 1570. So it costs you 930 to put on. And this just continues that move in gold, really, to me. I mean, this isn't that creative of a trade for me. The risk reward looks pretty good. And all gold kind of has to do is continue along its move upward.
I'm also going to give a call spread in gold. I think there is inflation now. The CPI numbers were relatively significantly high. And I think the Fed has told us before that they're going to let things run a little hot before they try to tame it. So if we have a little bit of inflation and the Fed is happy about that, then I think a typical inflation hedge like gold might be a good play. So I'm looking at buying the week 1 March gold, 1375, 1400 call spread for 4 ticks. Now it's a similar strategy as yours, although it's further away. It implies a bigger move. It risks 400 to make a potential 2100. Underlying is 1355, like we said, and both of them expire March 2nd. Thoughts?
The only thing I would say, and we talk about pricing a lot, because that's how I believe you can kind of look and see, are these trades going to work out or not, because of the fact you're getting a crazy good deal on this one. To me, the way that's priced, the options market is obviously feeling that that's a long shot. I like mine better because it's closer.
Last question. We've both talked about gold and being relatively favorable for it. Is part of that the fact that Bitcoin is not nearly in the favor it was a month ago, 2 months ago? Bitcoin has almost taken itself off the list of currency proxies. Thoughts?
I think so, at least for now. And Bitcoin could certainly come back, as could some of the other cryptos. But let's face it, I mean, gold is still and has been kind of that safe haven trade. That's not going to change anytime soon.
Thousands of years of history with that. Thanks for joining us on Market Movers. I'm Jim Urio, where we're hoping to make you a better trader.